Where it doesn't necessarily hold water is in the adjustments that are made in the in the fear aspect when the markets sell off. I don't know how they would deal with that. I know that we take a proactive approach to managing risk internally, but I don't know how they would react. But I would guess probably they would say stick to stay the course.
Yeah. I think the other thing that I'd like to just ask you too is like very textbook allocation, but there's a lot of other value add strategies that can apply when you're thinking about creating a portfolio that actually have like really good academic research to back it up. So were you surprised that they didn't add any other type of value add strategies to like the overall allocation?
Surprised, maybe not. Disappointed a little bit because
Okay. It's a good way to
you
put it.
can add things that have been proven through rigorous academic research to add value to portfolios. And most people, when they think of diversification, it's holding a couple different stock and bond funds.
Yeah.
As we saw during 2022, things can start moving down together all at once. And that is something where throw the textbooks out the window. You have your nice correlation matrix and you're looking at what is lowly correlated to the other thing. And then everything starts going down together. And you're just like, what happened to the diversification? There's a great line, Brian Portnoy in the Geometry of Wealth. It's a book called The Geometry of Wealth. He said he says diversification is always there for the party, never there for the funeral. It's such a
Mm.
great way of putting it because on the way up, diversification, you're like, why don't I just invest in all the stuff that's moving in the same direction at once? But on the way down, as diversification starts to work against you and everything kind of starts to correlate during market stress, it's like, why was I diversified on the way up and now it's not working on the way down? And that's just kind of the way financial markets work when there is especially panic and stress built into that current situation, you're watching everything be sold off. And so the way that we approach things internally is to be proactive about managing risk. It is about adding things like factor tilt, which are a, a way to capitalize on maybe some smaller, less expensive type stocks in the markets. Also adding multiple layers of not only diversification of the investments in themselves, but diversification of investment styles. So there's a lot of different ways that you can skin a cat when it comes to investing. You want, at least my opinion, you want to have exposure to all of them, or at least a good chunk of them, so that during times of stress, you don't want all your investments moving down together.